The other thing that we've been watching, if you're a sports fan out there, is that the Final Four matchups are finally set for this weekend, featuring a surprise team in UCLA, the first team since VCU in 2011 to advance from the first four matchups all the way to the Final Four. And that's cool and all, but we talk stocks here on Yahoo Finance and make money. So that's why we've been waiting for the culmination of the championships in our Final Four. The stocks left in Yahoo Finance's Stock Madness, and the coaches, if you will, that brought them to the big dance, are back with us today. Two money managers you know and love. We got Ryan Payne, Payne Capital Management President, and Ross Gerber, Kawasaki Wealth and Investment Management CEO, who have battled all the way to the Final Four with me and Akiko here. And guys, it's taken weeks, but here we are, down to Tesla, Disney in the East, and we got cannabis company Trulieve and Cisco in the West. And I think we should start over there on the west side of the bracket. And earlier this week, we had Dan Niles also saying Cisco is a top pick. But Ryan, I guess we'll start with you here in the Final Four matchups. Pitch me on why Cisco should be our Cinderella again.
I mean, obviously, Dan Niles heard my pitch last time, was so compelled by my brilliant insights. So you're welcome. And I think it just comes back to, again, look, we're going to go back to work. We're going to go back to the office. And you're going to see a lot of CapEx back on, corporate spending on boring things like switches. And a lot of the software needs to be upgraded and switches need to be upgraded. So Cisco's perfectly positioned for this. And it's the only tech stock I can find that has a reasonable valuation. It's 16 times forward earnings. You're getting almost a 3% dividend. I know for Ross, this stuff is very foreign. He likes to pick stocks that have no earnings or, basically have hundreds of years of profits priced in. So I think, the market's going to come back to reality and investors are going to be looking for profits. You hear that word profits, Ross. I know it's not familiar to you as the economy reopens, and that's where the focus is going to be. And that's why Cisco here is obviously the winner of this tournament.
I mean, Ross, you're just gonna come back and battle.
I'm sorry, I fell asleep for a minute there. He was talking about Cisco, and last time I think Cisco was exciting, I was 28. So the moral of the story is actually true. We're talking about Trulieve, right? So this is a very profitable company, and I think just today they legalized cannabis in New York. So when you look at Schumer on the floor of the Senate talking about legalization, and you see the enormous margins and profits that are made in cannabis, I mean, it's like not even comparable. It's like Trulieve is one of the best companies in the stock market for cannabis, and Cisco is one of the oldest, most unimpressive companies over the last 25 years. Now, to Cisco's credit, it's always had a 16 PE. It always will have a 16 PE. Maybe they get earnings going higher. But the bottom line is it's not going to grow 100 or 150% like Trulieve.
Well, it's already up 400%, Ross. And, I don't know. I don't think the market knows that we're going to get legalization in other states. That's probably not priced in. You're right. That's probably eluded everybody. So it's all about the
future. It's about the future, Ryan, and the future is cannabis.
I sense some sarcasm on the part of Ryan Payne there. That is one of the things that we have been talking about, though. In the year-to-date run-ups, right, Trulieve up 35%, Cisco up about 17%. We're not necessarily using that as a scorecard in picking a winner in these matchups, and you guys have put me in a tough spot of maybe here picking against a cannabis company that has shown real growth and real profits. But I mean, I'm not saying I'm picking them, because when you look at the other side of the bracket, we got 2 picks from Ross. But Cisco is one that we heard about earlier in the week, catching some bids. Kiko, I think I got to choose Cisco here.
Wow, look at that. Kind of Zack. It pains me to talk about UCLA, by the way.
I'm telling Kim Rivers. I'm telling Kim.
Don't tell Kim.
They were the
Zack,
11th seed, but it feels,
we need against weed.
We need one Cinderella story in there, right? Where Cisco's going to become it, maybe. Let's talk about Disney and Tesla, which is the other matchup here. Looking at numbers, of course, Disney up 2.5% year to date. We are also seeing that, we've seen the gains on the stock on the back of the strength in Disney Plus, but now we're talking about the parks reopening. Certainly it seems like all things are lining up for the company. And then you've got Tesla, which has been under so much pressure over the last few months, down 7% year to date. These are both Ross's picks. So Ross, let's start with you. Which one do you pick?
Well, I've got to pick Tesla if we're thinking longer term, because I think the bottom line is they're going to have a phenomenal year. Q1 is going to be tough for Tesla because they've got a lot of things moving at the same time. But I think when you look at the Cybertruck and the semi launch and the Austin Gigafactory completion, as well as Berlin, all happening this year, when we get to the end of the year, Tesla is going to be in a phenomenal position, and we expect their deliveries to double over the next year. So, we think in 12 months, they'll be doing over 1 million cars a year run rate. And this is very exciting. You've never seen a car company grow this fast, and we're not even talking about energy or the fact that they've cornered the market on cell production. Disney is a great company, which I love and own a ton of, but I think it's fully valued here for the reopening. So Disney Plus is a huge winner. They're going to have, I think, some struggles in the reopening, making it as profitable as it used to be with all the COVID protections. But I think longer term, Disney's in a great spot too, but it's just not as exciting as an opportunity that Tesla is.
Well,
Ryan, I know it pains you to talk about these two stocks. We're talking about growth on both ends, right? Which one do you pick?
No pun intended with Payne, P-A-Y-N-E, of course.
I know,
a lot of
seriously.
Payne right now.
That was not intentional.
You live in Payne. You're a value guy. You
Clever,
live with
Akiko.
Payne.
That's clever television. I like that. And, Ross, you leave me with two stocks that trade for 150 times forward earnings. Thanks, man. Thanks. And the only redeeming quality I can find between either stock is at least Disney's not trading for 20 times sales. So, given the fact that only about 2% of Americans drive Teslas, and Ross, I know you live in Santa Monica, the only place in the world people actually drive Teslas. You come anywhere else in the country.
That's not true.
No one else drives electric vehicles.
You haven't been to Shanghai, obviously. You haven't spent a lot of time in China.
Where there's another 200 electric vehicle companies. So I think competition is going to be stiff. I think, the adaptability to electric vehicles is going to take a lot longer. And I think the market's priced years upon years upon years of growth. So the more palatable of two very unpalatable options, I've got to say Disney, which again, I think is a bit overpriced here too, because to Zack, to Ross's point, we already know the growth is already baked in about Disney Plus. And I think there are going to be restrictions when you get back into the parks. But, if we're just trying to go with the less painful option, P-A-Y-N-A, I think we have to go with Disney on this one.
I have to say, I like how both of you have upped your trash talking over the last few weeks. I feel like maybe there's a segment beyond the March Madness bracket.
In the Final Four.
But it seems like there's some agreement here, right? I mean, Ross, I heard you say you still like Disney. You think there's more upside on Tesla. And then Ryan, you're saying if you have to pick between these two, it's Disney. So I feel like you've already sort of advanced the team. And so let's go with Disney. That might be an upset, even though Disney is a higher seed. When you look at the upside on Tesla, I don't know. Can we call it an upset, Zack?
I don't know if we can. And to be frank, I don't know if the seeds really mattered heading into this tournament either, but there they are in our graphic. But yeah, so that sets up our championship here. And these picks do matter because now it all comes down to finally one winner in what had started as 16 stock picks. We're down to 2. Disney versus Cisco. And Disney, interestingly, because we were talking about kind of the latter half of that, the park's reopening, you can make it a reopening value play here. And you can also look at Cisco, as we've been debating, kind of a boring legacy tech company, even in the words of the man who presented Cisco as the stock pick, Ryan Payne. So Ryan, why don't we start with you on Cisco? We know we already heard about kind of why you like it here, but really sell me on it. Because we're finally here at the big dance. You got to sell me on this one, beating Ross's pick in Disney.
Well, as the old saying goes, you have to skate where the puck's going to be. And for the record, I spent more time thinking about my trash talking this week than studying fundamentals, I have to be honest. I was like, what can I say to Ross that's going to be really offensive today?
Nothing you can say.
But then I started looking into the actual fundamentals of these stocks, just for the record. And, basically, I think what it comes down to, again, is I think you have a stock where a lot of the reopening is not priced in. We haven't factored in all the CapEx spending, and invariably markets look forward. They don't look backwards. And, a lot of the reopening is really going to bleed into next year, because Ryan Payne's not thinking about 2021, Zack. Ryan Payne's thinking about 2022. And that's where capital expenditure gets really interesting. And, I think, again, because Disney has already priced that, that's basically a work from home stock at this point, because Disney Plus, you put your kids in front of the TV while you were working, it's all priced in. It's old news.
Real quick, though, Ryan, real quick, because I want to drive in on that because we talked about it. How much of your pick here on Cisco really hinges on people going back to the office? Because that seems to be important for Cisco.
I think it is, and I think we've discounted how much we're going to go back to the office. I know personally with my firm, I'm going to keep pretty much an open door policy, but anecdotally, people are just going to the office because they want to. So I think there is a strong desire to get out of the house. I'd like to hang on the set with you at Yahoo Finance again. You're doing it from afar. It just hurts, Zach. It's just not the same.
Okay, because that's important to know, because on the other side.
Can we just acknowledge the fact that Ryan Payne's now talking in the third person? I mean, that shows you the confidence of an athlete. You're talking like an athlete now.
It's 3 weeks on TV. My ego goes like this.
It was a half-court heave. I noticed it. I noticed the shot. I'm not going to say it went in the basket. But, Ross, on the other side of the pick, I mean, you're looking at Disney, which doesn't seem to hinge as much as a return to normal because you got basically both plays. You got Disney Plus, right, if people stay at home, or you got the parks.
In fact, that's what makes Disney 100 times more attractive than Cisco, is the fact that it's got a double whammy of earnings growth drivers. And I know Ryan lives in the past because his picks are like Cisco, which was one of my favorite stocks in the 90s, actually. And the 90s were a great time
when
if you
were
alive.
Weed without a weed pen. Go ahead.
But see, Ryan wasn't alive in the 90s, so he just wants to ride the past still. And so I think one of the things that investors have to think about is the future, and the future is a combination of having the greatest streaming service besides Netflix and the greatest family experience that somebody could want to take their kids to. I don't know if Ryan's old enough to have children yet, but when he does, do you have children, Ryan?
Not yet.
When he does, yeah, see, he's just not even old enough. So once you have children, you'll realize that it's not just about Disney Plus, it's about the synergy between the parks, the products, the attractions, the movies, going to the plays. I mean, it's just the synergy of Disney's unbelievable. So opening everything up again will leverage their success with Disney Plus in a way they've never had before. So with the enormous optimism we're seeing here in Southern California with almost no COVID cases and the success we've had, Disneyland is going to be like overrun like you've never seen. So, I mean, I'm sure they're going to have security just to keep people out of that place. It's such a winner.
You want to refreshing though, Ross. The only time you're not talking about weed or gambling. First time, really.
No, I talk about video games and kids stuff all the time too. So I do kids and I do adult. I do both.
Stock picks for all age groups.
Ross, I'm not sure about no COVID cases in LA, but there's no question there is pent-up demand.
We had 350 yesterday. That's unbelievably low.
It's going down at a rapid rate. No question about that. And to your point, there's a lot of people who've been wanting to go out. Finally, Disneyland opening up. I mean, it seems like there's a lot of upside there. You ride that with the momentum coming from Disney Plus. And Zach, I don't know. I'm not sure Cisco has a comparable business on the other side that grows at that kind of rate.
Yeah, we tend to avoid risk here at Yahoo Finance, being the network that carries Warren Buffett exclusively here. Let's just stress that fact. And after hearing these arguments back and forth and the fact that Ryan Payne referred to himself in the third person, it's very hard to go against Disney and Ross's pick here. I would say that the winner of our Stock Madness tournament here in 16 stocks going head-to-head over the last few weeks is none other than Disney. After all of that, we're going to go with Disney as the champion in Stock Madness. Oh, yeah.
The day gets better and better.
Despite the fact that you wanted to pitch Tesla in the semifinals, it's Disney that takes the cake.
Yeah. We're clearly going to celebrate at a casino when we reopen.
Ryan, I'll take you out. I'll take you out for a joint and some gambling when we're done.
It's on, brother. It's
Ross,
on.
Ross, we're gonna try to get you a printout of that bracket with your hat on, so in fact, you did win the Yahoo Finance.
I will post it daily next to Ryan's picture.
Yeah, although a number one seed winning seems a little predictable, right? But hey, you went at it for several weeks here. We got Disney and Cisco to the finals, and Disney it is for the winner of the March Madness or Stock Madness tournament here at Yahoo Finance. Ryan Payne, Payne Capital Management President, and Ross Gerber, Kawasaki Wealth and Investment Management CEO. It's great to have you on for the last several weeks, but we hope to we'll think about another segment we can get going between the
Talk
two
Olympic.
of you.
Talk Olympics.
The void
in
of my
summer.
life is going to be so dark without this. Yeah, so we got to do something.
Yeah, enjoy your WebEx. Enjoy WebEx. Have a good time.
Great.
Congratulations,
Thanks so much,
Ross.
guys.